Hello everyone, and welcome to the Unified Bill of Lading Sales Order Update presentation. Lisa Thiele will be the presenter today, going over a new feature that's in our 4.4 software. It'll show us how to streamline workflow and to get some better controls over inventory, tax reports, and general margin postings. The phones are on mute due to the large audience, so if you have questions throughout, please type them into the chat window. And at the end of the presentation, we'll read off as many of the questions as we can and answer them on the fly here. If there are too many questions, we can't get to them all, then we'll go ahead and include them in the post-presentation mail-out. The slide deck will be available to all attendees. And I believe I've hit all the housekeeping. This is Rob Pierce. Probably should introduce myself. And now I'm going to hand it over to Lisa Thiele.
Good afternoon, everybody. We will be going over just what the Unified Bill of Lading Update is and what it means to you. The first part of the presentation will be at a fairly high level, giving you an idea of what it is, what it's going to mean to you, and to let you know where you might need to make some changes within your organization, possibly setups, and most probably procedures and processes. After that, we'll go a little deeper and give you a demonstration of what the process will be and how it will work. This will be of particular interest to the people that actually work with bill of lading and sales order. Okay. Billy, why isn't my thing going?
Click on your slides.
Okay, there we go. Sorry, y'all. All right. Bill of Lading Unified Update. What is it? Well, it's going to print the bill of lading, inventory, sales order invoice journals, and the sales order invoices before anything is updated. It's going to allow you to review all pieces of the transactions before anything is updated. Inventory journals, the gross profit journals, invoices. It will update all of these journals at the same time. Why? Well, we have combined two update processes, giving you a tighter control point, which should translate to fewer credit and rebills. Users will have the opportunity to catch the situations that cause credit and rebills. Normally, it is after you've updated the bill of lading and are reviewing the sales order journals and the sales order invoices that you realize that there's a problem. At that point, your only option is a credit and rebill. But giving you the ability to review the bill of lading and sales order journals at the same time, and the ability to see the sales order invoice before the bill of lading it is attached to is updated, you'll be able to make any required corrections, thereby reducing your credit and rebills, hopefully by a considerable bit. In addition, we had users that wanted to be able to use other valuation methods for fuel, FIFO, LIFO, lot, and serial. In order to do that, the bill of lading module had to follow SAGE's rules for inventory transactions. And in order to do that, the Unified Update was required. So we're going to be able to allow you to use those other valuation methods. But if you are considering using something other than average cost, be sure to check with the consultant before changing your setup. You will want to see it in action and determine what process changes you're going to need to make, because you will need to make some process changes. In addition, this one is my favorite because I'm writing tax reports all the time. There will no longer be any situations where bill of lading and sales order invoices report something different. The tax link work file information is going to be in sync. It's not uncommon to have a user delete an invoice out of a batch that was created through bill of lading and then re-enter the transaction with a different invoice number, possibly a different warehouse, etc. I've even seen it where the whole sales order invoice batch has been deleted. The user goes back into bill of lading and starts all over again, and we end up with duplicate bill of ladings and a real mess in the tax work files. Both of these situations cause the tax reporting work file to have duplicate disbursement records, duplicate receipt records, both of which will cause a problem with the tax reports. So is it a good thing? We think so. You're going to see all the journals before anything is updated. It allows you to look at what the bill of lading journal is reporting and compare it to the sales order invoice journal. You can look at the bill of lading cost and make sure that that's the cost that's on the gross profit journal. You can look at the gross profit journal and see something, if something is wrong right now with the gross profit before you update. Corrections in either bill of lading or sale can be made in either bill of lading or sales order before anything is updated. Your gross margin looks wrong. Is it the cost? Is the cost table wrong? If it is, make the correction in the cost table. Make sure the change is noted on the bill of lading and rerun the journals. The pickup point is causing a problem, it's wrong. You will have to delete and re-enter the bill of lading to correct that. But the price to your customer, you can change the customer's price on the bill of lading, lock it, and have it flow through to the invoice. You don't have to go back into the sales order to change the price. But you could. You can go into the order and change it there and lock it there and then come back and rerun your bill of lading journals. And as I said, it forces data integrity between the bill of lading and the sales order invoice, meaning tax information will be in sync. And as I said, this is the first thing I saw when I saw the unified update. So, here are the things that are new. Truck warehouses are going to be required on bill of lading headers. The bill of lading is going to do a price recalculation on sales order invoice distributions. There's been a change to inventory transaction journals. The distributions to a sales order invoice will flow through a clearing warehouse called ~C. There's going to be only one bill of lading transaction register. And if there is a problem during the update, the bill of lading batch will restart without help from support. So let's look at these a little bit closer. I said that truck warehouses are required on bill of lading headers. Some users use a plant warehouse on the bill of lading header. That will no longer be supported. This does not necessarily mean that you need a warehouse for each truck making a delivery. If you want to track inventory on each and every truck, then you might want to consider it. It is one way to do it, but it's not required, and it can be labor intensive. It requires that processes are lined out and followed for each and every transaction in order to make it work and give you usable information on a truck-by-truck basis. But if you don't do a warehouse for every truck, you do need a separate truck for each business line or profit center. What I mean is, if you have a truck and trailer line of business or profit center, and you also have a profit center for some of your bulk plants. So you've got truck and trailers, and you've got rack-ready bobtails whose sales belong to whatever plant the truck is assigned to. You might have 4 truck and trailer rigs, 5 bobtails for plant 100, 3 bobtails for plant 200. You would have only 3 separate warehouses, not 12. When entering truck and trailer loads, you would use the truck and trailer truck warehouse, no matter which truck it was. When entering bobtail loads for plant 100, you would use that particular warehouse for any one of those 5 trucks, and you would do the same for any bobtails that belong to plant 200. Here's some sample setups. This warehouse is set up for your truck and trailer profit center, and you can see that it's going to post to the profit center 900. Any truck that's a truck and trailer that you want to have the profits go to this profit center, that's what warehouse you would use on the bill of lading header. This is what you would use for any bobtail deliveries for plant 100 that flow through bill of lading. As you can see, any sale is going to go to profit center 100, and the same for warehouse or plant 200. Anything that is, has a sale with this warehouse will flow to the profit center for warehouse 200. I can't stress enough, if this is not a practice that you are currently doing, you will need to get with our professional service group and talk with a consultant to see what setups that you would need to do to make this happen. But remember, it is required that you use a truck warehouse, not a plant warehouse, on the bill of lading header. I'll get into this a little bit deeper when we do the demonstration and when I talk about the processing. The next thing is that we're going to be able to do a price recalculation on sales order invoice distribution. You may have a customer whose automatic pricing is based on a supplier's cost table, an OPIS table, or a table that contains a posted price. When the order is entered today for delivery 3 days from now, none of those tables has the price or cost that will be in effect at the time of delivery. 9 times out of 10, unless the price was quoted, you will want the most current cost or price to be used in pricing the customer. Older versions didn't handle this gracefully, if at all. So when the cursor passes over the distribution price field, it will reprice the transaction based on the customer's price setup and the bill of lading's date and time, unless the price is locked on the order. If you quote a customer, or if you, for some reason, manually override a calculated price when entering an order, you will want to lock the price on the order. Check the lock price checkbox on the order's header record after you make your price entry. If you enter a price on a bill of lading, overriding the calculated price that appears there, you will want to lock it on the bill of lading. You will check the lock price checkbox at the bottom, or click the lock price icon at the bottom of the distribution screen. If you change the price on the order or on the bill of lading without locking it, the update process is going to attempt to reprice it again just before it starts printing the journals. You'll see that here in just a few minutes. Inventory transaction journals are going to be different in the bill of lading update now. With inventory now in the new business framework, you have the ability to batch when you enter inventory transactions through the inventory transaction entry screen. The unified update requires it, and it will create a batch for itself called the ZZBOL batch, and it enters the inventory transactions into it. It's a virtual batch that only exists at the time you are updating. If you cancel out of the bill of lading update, the ZZBOL batch will go away. In addition, we are going to start using the standard inventory transactions, II for issues and IR for inventory receipts. DM2 up until now used transaction types that were not SAGEs. The LR transaction type for receiving product, and in some earlier versions, LT for moving product from a truck warehouse to a regular warehouse. Now we will be using the standard inventory transaction types. IR for receiving product into the truck warehouse, II for moving transactions out of the truck warehouse to a plant warehouse, and IA for credit and rebill type transactions. When the IRs and IIs are processed, it will receive the product into a truck warehouse, then issue it out to the warehouse that will either receive the product or sell the product. It actually mirrors what physically happened. The truck was loaded, product was pulled out of the truck, and it was dropped at a plant location or a customer's location. My demonstration later on will show you how this is going to work. In addition, the inventory reference numbers have had a change made to them as well. When all inventory transaction types entries are made, they are assigned a reference number. Now the transactions that come from bill of lading their reference number will start with the letter B, and each inventory transaction associated with the update of a specific bill of lading will be numbered sequentially, which will make researching problems easier. So the first receipt in would be B1, the issue out would be B2, and then when we receive it into the receiving warehouse, it would be B3. Distributions, part of this, we also made a change in how it handled distributing to a sales order invoice. These distributions are now going to flow through a clearing warehouse, which we call ~C tilde. It keeps the entries from contaminating the cost in a real warehouse. Part of the effect of using IR and II transactions is that when the system processes them, they will affect the average cost a little differently than they did before. In earlier versions, cost of goods on a bill of lading transaction did not come from inventory. It came directly from the bill of lading. The system bypassed the normal inventory transaction processing. Now, we're using those inventory transactions, IR and II, and those transactions will affect the item's cost in inventory before the sales order invoice ever hits it. So while the cost of goods is still based on the cost from the bill of lading, because we're using those IR and II transactions, we have to be careful how it's processed. The cost of goods is actually coming now from the inventory cost on the transaction that was received into inventory before the invoice is posted. To keep that bill of lading transaction from affecting the cost in a plant warehouse, if we use that plant warehouse on the bill of lading header screen, or to keep the bill of lading cost from being affected by the cost on the item in a warehouse when we process a sales order invoice from bill of lading, it's going to look like it's being sold out of warehouse 900, let's say, on the distribution screen. But while warehouse 900 gets credit for the sale, behind the scenes, the system receives the product into warehouse C and then sells it out of the warehouse. You'll see that in action here in just a few minutes. We've made a change to the daily transaction registers. Going forward, the BL journal from bill of lading will contain all the entries, product purchase and taxes. In previous versions, we had two journals, the BL journal and the LR journal. The BL journal recorded the tax entries, debiting the tax accounts and crediting the purchases clearing account, while the LR journal recorded the product entries, debiting inventory and crediting purchases clearing. Now there's going to be a single journal, the BL journal. As an aid to tell which entries are taxes, the comments on the tax entries will indicate that they're taxes. This is going to make researching problems through GL a lot easier. All the entries for a bill of lading update will be in one place instead of being scattered in two separate journals. When you do the update, it's going to print the bill of lading daily transaction register first, and then it will print, after you update it, it will print the sales order daily transaction register. And as I said, if there's a problem during the update, the bill of lading batch will restart without help from support. This has been a problem in the past, but should all go away in the future. Now, processing. You're going to enter your bill of ladings as usual. The only change to your data entry is that you have to use a truck warehouse on the bill of lading header, not a regular warehouse. If you use a regular warehouse, the IR transaction will receive it into that warehouse, and the average cost of that warehouse will be affected. The II transaction, the transaction that reflects the offloading of the product from the truck, will use that new average cost to transfer the product out of that warehouse into the receiving warehouse, like a card lock location, or into the C warehouse. So the cost on the product when it's received into a card lock warehouse will be at the average cost on the issue, the II transaction, not the cost from the bill of lading. And the cost of goods on the sales order invoice will be at the plant's average cost, not the bill of lading cost. Again, if you aren't using a truck warehouse now, you will need to make sure your users are using the correct warehouse on the distribution. Check with your consultant for the setups that you will need for your particular situation. After you're through entering your bill of lading, you're going to print your bill of lading journal. If you modified a calculated sales order price on the bill of lading distribution screen without locking it, or if a user altered a calculated price on the order itself, the system will tell you that it needs to recalculate some prices. Now, when I say a calculated sales order price, this is a price that you have set up in the inventory pricing file that says this customer is being priced off of Tesoro plus 5 cents, or it's being priced off of Opus plus 3 cents, or off of that posted price table for your bobtail trucks. It's going to print a report. When you click OK, it's going to print a report that will tell you what it's going to change, how it's going to change the prices. Here you can see what a sample would look like. It tells us our supplier, our bill of lading number, the sales order that's associated with the bill of lading, what item it was, what the price was, and what the system wants to change it to. After printing, it's going to ask you if you want to update that pricing and proceed. If you answer yes, the price will be changed and the bill of lading update process will continue on printing the rest of the journals. If you answer no, you have the opportunity to go back into the bill of lading or the order and lock or change the price. The BL journal, which lists your taxes, or I'm sorry, it lists the purchases, the tax journal, the freight journal, they all print as usual. Then it asks you if you want to print the inventory transaction journals. It's going to use, remember, that batch ZZBOL for the automatic batching. If at this time you have seen a problem already with the journals that are printed out, you can answer no and stop the process and go fix what you have already seen as being wrong. If you answer yes, it's going to go ahead and start printing the inventory journals. For an inventory distribution type bill of lading, it is going to print an IR transaction to receive the product into the truck warehouse. It is going to create an II transaction to move it out of the truck warehouse, and then another IR transaction to receive it into the receiving warehouse. Here's some examples. Here, the top report is the issue register. The bottom report is the receipts register. It apparently prints them in alphabetical order according to the type of register. But actually the first transaction that hits inventory is this first IR transaction. It is going into my truck warehouse 900. You can see what product it is. You can see that it was bill of lading 37 from vendor number 1 with a transaction date of 9/1. Here is the reference number that I was referring to earlier. The reference number is starting with B. This is reference number B52. Well, after it receives it into the truck warehouse, it then takes it out of the truck warehouse in preparation for dropping it wherever it is that we are going to distribute it. That reference is B53, and you can see that it is being issued out of warehouse 900. In my example here, I'm receiving the product into my cardlock warehouse, and you can see the third transaction, which is my second IR type transaction, and you can see that I'm receiving it into warehouse 001. And you can see that my reference number is B54. So later on, when we look at an inventory detail transaction report, which can be kind of busy, and we can't, it's sometimes, it used to be hard to tell what order things happened in, we'll be able to see. We know this one came first, this one came second, and B54 came last. Notice that it was received into my truck warehouse for this cost. It was issued out of that truck warehouse at that same cost, but when I received it into my cardlock warehouse, it added freight to it, and I now have a freight factor to the cost of my product in my cardlock warehouse. For a sales order type distribution, we have the same three type transactions. The first two do exactly the same thing as it did with the inventory. It receives it into the truck, it moves it out of the truck, and then the third transaction, the second IR transaction, will receive it into the C clearing warehouse, where when the sales order invoice is updated, it will clear the entry. And here's some example reports here too. And they look almost exactly the same as my inventory drop did, except that instead of receiving it into a warehouse, it's receiving it into this clearing warehouse. You will notice that my costs are the same all the way down. It's because in this particular scenario, I am not adding a freight factor to the cost of the product. I will be charging the customer for freight, but I will not be adding it to the cost of the product. Now, you might notice that my reference numbers are the same. That's because when I made the screenshots for this slide, I did not update my inventory drop register. So when it came around to print this register, it started over with those numbers. If I had updated my inventory drop batch, these would have a different set of numbers. You'll see that here in just a little while. Then it continues on. It's going to print the normal sales order invoice journals, which would be the sales journal, sales tax journal if you are in a state that charges sales tax on fuel. It's going to print the gross margin journal. It will print the sales order invoice, and then if everything is okay, well, even if it's not okay, it's going to ask you if you want to proceed with the unified update of inventory, bill of lading, and sales order. You will answer no if you have seen anything wrong with those journals or invoices. At this point, this is the moment of truth where your user will decide whether or not it is okay to go on. If he sees something wrong and goes on, the only option is to do a credit and rebill. So it behooves the user to verify things on his journal before updating, make the necessary corrections, reprint journals and invoices if necessary, review them again, update them, and then print your daily transaction registers. Now, what I'm going to do is give you a little demonstration of those transactions that I just showed you in the screenshot. Okay. Here's my batch that has my bill of lading with my transaction to my cardlock warehouse. Note, nothing has changed on the bill of lading header. You just need to remember to use the appropriate truck warehouse. Note that on the distribution screen, I have distributed it from my warehouse 900 to my cardlock warehouse. And here's my freight entry. I'm charging a surcharge plus a 2-cent a gallon freight. All of this is exactly the same. Nothing's changed here. So I'm going to print my journals. The BL journal is going to print first. It's typically a report that isn't looked at very closely, but there is one thing that needs to be checked before the batch is updated. You need to make sure that your to distribute number equals your distributed quantity. This is really important if you're using the DTN bill of lading import. It's easy to forget and leave a bill of lading on hold, which would cause an out of balance here between these two numbers. It goes on to print the tax journal. It's exactly the same as it was. It reports the taxes that were picked up based on your bill of lading setups for the vendors. Taxes plus the cost of the product equals this total extension, which should be the total that appears on the vendor's invoice. Freight journal hasn't changed. It still reports either the freight that's being added to the cost of the purchased product, freight in, or it reports the freight that's being charged to the customer, freight out. Next, it's going to ask you if you want to print the inventory transaction journals. If you've already, as I said, if you've already noticed something wrong, you can answer no and go back into the bill of lading batch to fix it. Otherwise, you can answer yes, and it will continue on to print the journals. So here's my issue journal, and here is my receipt journal. Same journals that you saw in the slideshow. Once this is printed, it's going to come back and ask you, because this was a batch that contained only an inventory drop, it's going to ask you if you want to perform the unified update. This is your last chance to stop and fix something without having to resort to a credit and rebill. If you answer no, you can go back and fix whatever's wrong. If you answer yes, it's going to update bill of lading and inventory, changing quantity on hand and average cost. Which, if the cost is wrong, and this is going into my cardlock warehouse, the next time you process a transaction file from your network, you will end up having the wrong cost of goods recorded. After it performs the update, it will then ask if you want to print the daily transaction register. We're going to answer yes, and you will see the new single daily transaction register. It's one journal. It's going to debit inventory for the cost of the product plus freight while creating the entry to purchases clearing for the product and the entry to the freight account. It's going to debit the tax accounts while crediting the purchases clearing account for those taxes. Notice how the comment on the tax lines says tax. Okay, now that this is updated, let's take a quick look at what this looks like in inventory. I'm going to print the inventory detailed transaction report. You can see here is my truck warehouse 900. Here is the transaction 52, receiving the product in to the truck. We offloaded the product from the truck, and we dropped it into the cardlock warehouse. The truck warehouse starts out with 0 on hand. It ends up with 0 on hand. While this might be a fairly obvious statement to make, I'll go ahead and make it anyway. If you were to leave a product in this warehouse 900 and did not put it to another warehouse because it was a split load, or maybe it was over distributed because you're in Texas and it's hot as heck down here, and you need to do something with the over distribution, you need to make sure that the warehouse zeroes out. If you don't, then you're going to end up with a situation where you have product on hand in the warehouse at a cost, and it will affect entries going on forward. You can see that my cardlock warehouse had a beginning balance. Here's my drop, and it has a new average cost. Now let's look at a sales order type transaction. I have a sales order here. This sales order, the customer called in on Friday, September the 2nd, for delivery on September the 6th. The customer's pricing is based on the Tesoro cost plus a 5-cent margin. But because the order was taken on Friday and it's not going to be delivered until September the 6th, the price that's on the order is based on the most current Tesoro cost in that cost table, which is 3.5478 plus a 5-cent markup. Now, at some point between Friday and the time that you get the paperwork back from your driver, the Tesoro cost for September the 6th is entered into the system. When the bill of lading is entered with the correct date and time, the bill of lading is going to pick up this new cost here. And when we go to distribute the order, let's see what happens. I'm putting my truck warehouse in, entering in my product. It picked up the current cost from the cost table. And I'm going to go to the distribution screen, and I'm going to tell it what sales order number and what product I'm distributing to. Notice it still has that old price on it. I'm making sure that my distribution warehouse is my correct one. In this case, this is a transport load, a truck and trailer load that I need to have go hit this profit center, so I will not be changing the truck warehouse. Watch what happens when the user tabs or enters over to the price field. Over to the price field. Oh, well, good. So let's go back and look at our order again. Cancel my bill of lading. Let's change this date to 6. Okay. Excuse me, but I'm not sure why this is not working. So we'll go ahead and accept it and see what happens. When I print my journal. It says that it should have, it's probably because, I'm sorry, I've messed with this sales order several times over the last couple of days, and it probably, I confused it. But the system, when it gets to this point, knows that there's some distribution lines that need to be repriced. Here is what the price was. Here's what the system wants to change it to. It's automatically updating the pricing based on the bill of lading's date and time and the customer's pricing setups. However, our user is making an executive decision and decides to put the price back to what it was. So he answers no. He doesn't want to update it. So he's going to go back into the bill of lading. And he is going to lock that price in because he thinks he knows better than the system what the customer should be priced. So we're going to lock it. Now, notice what happens. I highlight the item, I click lock price, and when I tell it OK, the system gives me a signal here saying that I have got a locked price. So I'm going to go ahead and accept it. Go to my journals, and now my journals are going to print. It's not going to want to reprice. Notice that you can see on the journal here that it's showing the price our user locked in. We're going to get all of our other journals. The tax journal, the freight journal. Notice on the freight journal, I am charging the customer freight. And then it wants to know if we want to print out the inventory journals. We do. And we see the transactions being received into the truck warehouse, being offloaded from the truck and delivered to the customer, and the system puts it into the C warehouse. Next, because this is a bill of lading batch that created the sales order invoices, it will ask us if we want to print the journals. We'll say yes. We will get the sales journal, just like always. If you are in a state that sales taxes your fuel, the next journal that would come up would be your sales tax journal. If the gross profit exception report is set up, you will also get this. Notice, if our somewhat clueless user here was paying attention to the gross profit exception report, he would see that he is not getting the 5 cents that the company expects him to. He's only getting a profit of 2 cents, and it is below the limit. So he could stop right here if he was paying attention, but he's not. So he goes on, and he prints the gross profit journal. At this point, he's checking this a little bit more carefully, and he sees, uh-oh, he has a wrong price here. This is the last chance he's got. And I think most consultants here at DM2 would agree with me, this is the single most important journal that anyone can ever print out. If your users don't look at anything else, they need to be reviewing this journal very, very carefully. And this is where our friend finally figures out that the price he put in is not getting the margin that he's expecting. So after printing the journal, and it asks him if he wants to print the sales order invoices, he answers no because there's no point because he knows the price is wrong. Now, he can either, it asks him now also, do you want to proceed with the update? And he's going to answer no because he knows if he does, he's going to have to come back and do a credit and rebill. Now, he can either go back into the order to correct the price, or he can go back into the bill of lading. To me, it's easier to go back into the bill of lading. There, he highlights the transaction and he unlocks it. And now, it reprices it like I was trying to get it to do for you earlier. It puts the correct price on it. He says okay, and then he accepts. Now, alternately, he could have just started the update over again, got the message that said it was wanted to reprice, get the journal, take a quick look at it, make sure it's getting what he wants, and he could have said yes, go ahead and update it. But he still had to come in here and unlock it first. Okay, now it repriced the transaction based on the bill of lading's date and time, and because he caught the problem here before anything was updated, he prevents someone else from having to do a credit and rebill. Someone who might take the shortcut of deleting the invoice, re-entering it, and then updating the sales order invoice batch, thereby giving us 2 distribution records for our tax reporting file. He's printing all his journals again. In case you're wondering, what I'm doing is I'm printing these to a PDF printer so that I can, if we need to, we can go back and refer to them later on the screen. Here's my sales journal. I've got a higher amount now. And because my price was within the tolerances, I don't have an exception on my exception report. I look at my gross profit journal, and I'm getting my 5 cents a gallon like I should have the first time around. Now it asks if I want to print the invoices. Here I'm going to say yes, and print my invoice. We can see where it's charging my customer the correct price. He's getting charged 3 cents a gallon for the freight. He's getting charged the fuel taxes. This particular invoice is set up to recap the taxes rather than print the taxes underneath each item. And then, of course, we've got our total at the bottom. At this point, it will ask if we want to do the update. We're going to, all is good now finally, so he does do the update. It's updating bill of lading, inventory, accounts receivable, sales order, general ledger, or we'll update general ledger here when we do the daily transaction register. The first one we're going to get is our bill of lading transaction register. Notice that it's receiving the product into my truck and trailer inventory for diesel. The taxes are hitting the tax account, and everything is hitting the purchases clearing account. So even though the item is going to end up into the ~T ~C warehouse, the truck and trailer inventory GL account is still getting the entry for the purchase. Here's my sales order daily transaction register. My sales dollars is going to truck and trailer sales account. Inventory is being relieved from the truck and trailer inventory account, going to the truck and trailer cost of goods account. AR is getting hit, freight's getting hit. So even though the C warehouse is being used behind the scenes, the correct profit center is getting the entries for the inventory, sales, and cost of goods. Now a quick look, we'll go ahead and update this. A quick look in inventory again at what it looks like with the detailed transactions. So here's my truck warehouse 900 again. You can tell who's what here because of the reference numbers. We start out with reference B55. Here I'm receiving the 4,000 gallons in. B56 is it's taking it out. We're offloading it off the truck. We're putting it into the C warehouse, and we have the invoice then relieving it at all the correct costs. The unified update may require some internal process changes. Do you have one person that updates bill of lading and another updates sales order invoice batches? If so, you will need to make a process change. One or the other is going to need to do the update. Possibly the bill of lading person reviews all the bill of lading journals, then notifies the person responsible for the sales order invoice update, and they're the ones who prints the journals for posterity and then does the updates. Do you use truck warehouses? If you don't, you will need to get with your consultant and determine what setup changes you will need to make and what processes your users will need to change. During your upgrade acceptance testing, they will need to practice using the correct warehouse. Once you go live, if they use the wrong warehouse, either on the header or on the distribution screen, it will cause problems with cost and GL. Do you have queries or reports that use the old inventory transaction types, LR and LT? If so, you will need to have them reworked. Here's some answers to some questions that we know that you are going to ask. These slides will be available. And if you like, I can also, since I was saving my journals as I printed them, I can save that off in a PDF file, and you can have them for your reference as well. The unified update is strictly for 4.4 version and forward. It cannot be retrofitted to earlier versions. It will be included in your upgrade, and you can contact Terry Gerchens for an upgrade request. If you need or want to make setup modifications, please contact professional services, and we will get a consultant to you that will help you with the modifications that you need, maybe for truck warehouses, or if you decide that you have a need for using the alternate valuation methods for fuel. That brings me to the end of my presentation, and we will open the floor for questions.
Thank you very much, Lisa. Great job. I know there was a lot of information in there, and if you're not someone who does this on a daily basis, you might not be able to appreciate really the workflow is streamlined as the effect of it, and the controls are improved so much more. Bill of lading is where all of your receipts come in. It flows to AP, purchases clearing. It's where your costs are coming in, your inventory, your pricing, your margin, your posting to GL, your taxes, the generation of invoices. It's really a central epicenter of your system integrity, and getting this accurate is just so key to all of your business intelligence, all your compliance reporting. It's an area we put a lot of time and effort into to not only streamline it, but to improve the quality of the data coming into the system. Billy, were you able to gather up the questions that came in? We've got about 4 or 5 minutes to go through them.
We have one question that just came in. It says, will reports go to paperless?
Yes, I'm sorry. That's one thing that is one thing that I forgot to mention. With the upgrade 244, I can get back to my. If you're talking about the Sage paperless, bill of lading is now. Let's see here. Sorry, I thought I could show you. Bill of lading is now an option to print through Sage paperless, so yes, it can. And yes, and it will print through the DM2 paperless as well.
Okay. We have one other question. Will it affect DTN imports?
No, it will not. You will do your DTN bill of lading import like always. It will flow into the consolidation batch. You will start your batch and bring them into your normal bill of lading batch, and you will process them like always. It's only well, you know what, Rob, I'm not sure what's happened now with the DTN bill of lading import. Is the truck warehouse open to change?
I'll have to we could put that down as a research item, Lisa, and include it with the answers on the questions.
If the truck warehouse comes in on the bill of lading from DTN, absolutely no problem at all. If it doesn't come in, then it may be that it needs to be changed, and that's where we need to make sure that you have the ability to change that truck warehouse.
Okay, I have another question. What if we use FIFO? This is a question that I would like to defer to someone who has a little bit more experience with FIFO. It's going to work. I've tested it. But it is, to me, FIFO is used for specific circumstances like buying off the pipeline, buying in large lots. It wouldn't be something that would be used on a day-to-day basis, I would think, for a warehouse sale through a warehouse or through rack to customer type delivery. But it will work. Remember, this only affects the update. But with FIFO, you will have the opportunity to check which layer you wish to use to sell to your customer. And we have another question. Is there a way to turn this off? For example, a toggle on or off?
No, this is the way it's going to work as far as I know. So it will necessitate some thinking on your part for setups and processes.
I have another comment regarding the FIFO, and it says FIFO instead of average costing in inventory.
So on a plant warehouse, sure. So not coming through bill of lading, but just billing from an invoice, yes, it will.
That is the last question I have at the moment.
Billy, I got some feedback from Roxana confirming that we can change the warehouse on the bill of lading import.
Okay, and I have one more question. Is the upgrade available now?
Yes, we are actively doing upgrades to 4.4 now. I think the list is growing longer. Rob could address that better than I can. So you want to get your request in as soon as possible.
Yeah, we had our user conference in July, and that's when people first got exposed to this, and quite a few people were excited, and the backlog is starting to build up.
And no other questions at the moment.
Okay, great. Well, that takes us to our time. Thank you, everyone, for your participation today. Our next webinar will be on October 13th, and it covers Sage Mass Intelligence. That's the next generation report writer. It's replacing FRX. It's an Excel-based financial report writer, but it allows you to go beyond general ledger. It also encompasses non-financial metrics if you really want to get into scorecards and things like that. So we hope to see you on October 13th. Thank you very much.
Thank you.